Apple stock, AAPL stock, is being offered. It's being sold off, and by, of all people, the world's biggest value investor. Now, Apple stock itself is a solid value investment, but it's facing three different sort of obstacles which are pulling the stock downward. First and foremost, Warren Buffett has sold off about 10 million shares of his holdings in Apple stock. Second, we have competition from who also are seeing overall iPhone sales and cell phone sales in general moving lower. But thirdly, we also have what I would consider a one-off, the EU's penalties against Apple for their practices in Europe. But what I wanted to focus on for Apple stock is Warren Buffett dumping some of his shares in favor of an oil company or two oil companies, meaning his preference is not one of the world's biggest companies, but instead an oil company whose stock really hasn't moved much at all over the past 2 years. When you start to look at what's going on with Apple stock with regard to that one thing, it really does raise your eyebrows. Let's jump in. I want to talk about Warren Buffett selling off some of his Apple stock shares and what that preference means for Apple stock moving forward. Let's jump in. Let's break down some of the things that are affecting Apple stock. Of course, iPhone sales have dropped some 24% in China. Two reasons. Number one, overall, cell phone sales the rate of growth of increase has been declining. Secondly, Apple themselves getting stiff competition from within China. But you also have another factor that's really important when looking at China moving forward. Their economy, which was built on a whole lot of fluff of overinvestment in real estate to the point where that bubble is probably going to bring the Chinese economy to a screeching halt. Where's the growth within China, domestic-led growth, that would drive cell phone sales higher? Chinese are preferring cheaper phones. So that's something that is, when you consider Apple stock, one of the probably the biggest factors. But there are two other things I wanted to take a look at. The $2 billion EU antitrust fine. Okay. From a value investing standpoint, this is sort of a one-off. If that were to hit, the price would drop, and then you could buy in because it's a one-off. These kinds of things, a lot of value investors actually kind of step in when they see these kinds of moves. Regulators, one-time payments from companies. Okay, you get your slap on the hand, you pay the fine, stock drops, you buy in. But this one here, Warren Buffett's Berkshire Hathaway holds the key to Apple stock. They sold about 10 million shares of Apple stock. And the preference was Chevron and Occidental Petroleum. Now, by preference, sort of kind of think this through. Warren Buffett's sitting on about $165 billion, and they're all in bonds. It's basically cash. But he's sitting on, say, U.S. 10-year Treasury yield bonds. The Treasury, the 10-year Treasury note, if yield were to move downward, of course, price goes up. Now, everybody expects at some point that the Federal Reserve will be moving on interest rates. I, for one, and I've said this on many of my videos, believe that the Federal Reserve is probably going to have to push interest rates a little bit higher first. But the eventuality is that their move in short-term rates, maybe at 5.5 to 5.75, maybe to 6, maybe to 6.25 at the highest. But then what happens next with those bonds? So if Warren Buffett has been buying up all those bonds, the U.S. 10-year Treasury note, the sort of benchmark investment, once the Federal Reserve contains its inflation targets and gets the economy where it wants to, it might start dropping interest rates, which would, as yield goes lower, price moves upward. Warren Buffett, keeping all that cash in bonds, could see some serious profits there, 10, 15, 20% increases if we see interest rates moving downward in a significant manner. In the meantime, his worst case scenario, he's sitting on about 4.25% interest rates on the U.S. 10-year Treasury. So he doesn't really have a worst case scenario. If he has to, he will sit on those treasuries for 10 years and collect that interest. In the meantime, the stock market yield is pushed a little too far. So Buffett's sort of take on that is he's sitting on a good position that will become very profitable. So he doesn't want to do too terribly much with that. But he's also looking at Apple stock, you're looking at two basic variables. First, you've got the Chinese economy is slowing down. Consumers are not buying iPhones as at a rate that is going to really drive Apple stock. Apple stock's a little overpriced given what analysts are expecting for future earnings per share. It's slightly overpriced versus, say, the U.S. 10-year Treasury or the S&P 500, but not too terribly much. It's sort of right in that wheelhouse. So for Warren Buffett to pull the trigger and say, you know what, instead of getting rid of these U.S. 10-year Treasuries, which I'm going to get 4.25% if I sit and do nothing, or once the Federal Reserve, over the course of, say, 2 or 3 years, finally starts dropping interest rates, I'll pick up an extra 10, 15, 20% as I dump those U.S. 10-year Treasuries. Instead of Warren Buffett opting to get rid of those Treasuries, he's selling some Apple shares, which are overpriced from a value investing perspective, and instead buying stocks that have high yields, but the stocks themselves are just not moving. Now, those high yields will be cash via dividends coming in. So that's probably what he's really looking at, those are going to be sort of cash cows for him, but there's not going to be much stock movement in those stocks. Oil, let's break that down. OPEC has been dumping production numbers downward in the hopes to push the price of oil higher, but it's just not happening. The reason? The Chinese economy is slowing down. So Buffett's getting into oil companies when the key metric, the price of oil, really isn't budging that much versus holding on to Apple stock. That should really kind of raise an eyebrow when you kind of look at it and break it down that way as someone who's looking at Apple stock from that perspective. The Chinese economy is slowing down. Chinese consumers, there's not much in the way of really pushing domestic demand. And because of that, Chinese consumers are definitely not buying iPhones at the same pace. That will affect overall revenues for Apple, which in turn is going to drive Apple stock, which pushed Warren Buffett, the world's biggest value investor, to opt out of some of his shares of Apple stock in favor of oil companies, which don't really look to have a whole lot of upside for those stocks themselves. When you look at it from that perspective, Apple stock could see a lot more selling. Moving forward, here's a good look at Apple stock itself. AAPL stock is the symbol. You can see that this is a 4-hour bar chart that I pulled out mid-morning and clearly down. Overall, throughout the years, much higher. But where could it go in the future? I'll break that down in just a second. Here is Apple stock versus QQQ. This is the ETF versus NASDAQ for NASDAQ itself. And as you can see, down considerably on a percentage basis versus its overall counterpart, the NASDAQ 100. Looking at projected revenues, now I've not seen any big shifts in future revenue projections for Apple's, which would drive Apple stock one way or the other. For now, still holding at $393 for 2024, $419 for 2025. That's important to keep in mind. Net margins, they're still very profitable net margins from that perspective, 28.36%. Projected earnings per share, looking for $6.57 in 2024, moving forward and kind of breaking down the yield. Treasury yield, roughly right now, I think today I saw about 4.175 for the U.S. 10-year Treasury yield, the benchmark, the one you first start and say, what should I be using that as the measuring stick to compare anything I'm going to get involved in? S&P 500 yield about 3.28%. It is pushed to its limits. AAPL stock, the earnings per share versus the price, brings in a yield of 3.851%. Given all else equals, assuming we see revenue coming out of Apple for 2024 and 2025. But is the writing on the wall, and will we see more selling in Apple stock, broadly speaking, based on what's happening in China? China is slowing down considerably. Consumers, all that real estate buildup, it was all fluff. And now there's nothing left there. This will affect overall the economy in China, because a lot of those people who were dependent on that really driving the economy in China, that's no longer there. There's so much oversupply of housing in China, and of course the bubble itself, that the perpetuation just isn't there with the Chinese economy. This is affecting Chinese stocks across the board. Given that, you really need to, when you're taking a look at Apple stock as a value investment, what will the overall impact be on revenue and earnings? Now, net margins were a healthy 28%, but what happens if we start to see iPhone sales fall further in the next couple coming quarters, over the next, say, 2.5 years out of China? Don't expect too much growth out of China, plain and simple. Apple relies upon that. Now, Apple, of course, is really trying to get to their next thing with sort of a catalyst event that will really propel growth forward. I don't know that their little Space Macs are really going to do it. I tried them out. They're super cool. Not necessarily for me at this point. I wouldn't use that in lieu of a computer. Price point's a little high, but Apple's always proven that their price points just don't seem to matter, that they do perpetuate that kind of growth. I think that it's a really super cool product, not something I would use on a regular basis. Would that necessarily be a game changer like the iPhone was? Probably not at this point, but it's still early in that game. We'll see how that plays out. In the meantime, for Apple stock, I think Warren Buffett selling like he did in lieu of an oil company, opting to not hold on to as much Apple stock as he was, while at the same time opting to buy into oil companies when oil stocks really aren't moving higher or lower. Neither is the price of oil, because of the decline in China's economy. This puts Apple stock in a really sticky situation. I think we see a lot more selling in Apple stock, but ultimately, once the dust sort of settles on that, you can reevaluate Apple stock as a value investment given future metrics we don't have at this point. Make sure to hit that like and follow button. This is something I follow kind of closely. As a devoted Apple user, I bought my first Apple computer back in the 1980s. Make sure to hit that like and follow button. We'll see you in the next video.